Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Tony Zhang, Chief Strategist at OptionsPlay, for a review of the Nordics markets and option strategies to trade the trends. Tony, it's great to see you as always. Welcome back to Trade Talks.
Thank you so much for having me back.
And Tony, just like we're asking in the US, can equity markets continue to rally in a rising interest rate environment? And with that, let's take a look at the Swedish 10-year.
Yeah, exactly. All investors have their eyes on bond yields these days because we've seen an inverse relationship between increasing yields and negative equity returns. So I wanted to take a look at over the long run. What does the data look like with respect to rising interest rates and equities? And the data clearly shows that despite a rising interest rate environment, equities can continue to rally, and they actually do about 75% of the time during a rate increase cycle. Equities still also rise during that period of time. They simply just don't rise as quickly or as fast, only about a third of the movement that we typically see in a rising interest rate environment. So when we look at the Swedish 10-year yields, recently bouncing a little bit lower from that 42, 43 basis point level here and consolidating quite a bit here over the past few days. And that's really provided a bit of a rally here for the Stockholm OMX S30 index, which has rallied quite a bit here over the past couple of weeks. It's paused a little bit over the past week or so, but I really think that there is potential upside here. But it is quite exhausted. We've had a pretty big move here in the Swedish markets, which are fairly diversified as an index. It is overbought, so we do have some concerns about a short-term positioning, a little bit of correction here that we could see here out of the Swedish markets. Now, when we switch over here to the Copenhagen market, which is much more concentrated within healthcare and biotech, we really have seen this index, which has led the Nordic markets higher throughout the later part of last year, really started to consolidate and actually fall behind here. And it's actually just, again, testing that major 1600 level here at risk of potentially breaking lower and moving lower here. So Copenhagen, out of the major indices, actually looking the weakest here at the moment. Now, when we take a look at Helsinki, this is really where an index that's fairly dominated by industrial and machinery type stocks. And this is where the strong cyclical nature of these types of stocks, we actually believe are going to outperform over the next 3 to 6 months as the economic recovery continues to take shape. These types of industrial names are the ones that we're focusing on. So if you look at Helsinki, very slow grind higher here, very slow and steady. And I really think that this is an opportunity for the Nordic markets is out of the Helsinki markets. And then when we look at Oslo, which is obviously very heavy in oil and gas, this is really where we're starting to see a little bit of exhaustion as crude has pulled back here into that $60 level over the past couple of days. We have a little bit of a bounce here on the news from the Suez Canal, but so far, I think that the oil is going to stay roughly range bound here. So that's going to put a limit to how much higher, in my opinion, that Oslo can go. That 940 level here on the OMX 020, which is the Oslo index, I think is a short-term resistance level that we're going to hold for a while.
And Tony, are you seeing any improvement with the economic data?
Yeah, so this is one of those cases where I would say that the economic data right now is catching up to where equity markets have been pricing in for a few months now. Equity markets are obviously forward-looking, anticipating that things are going to look fairly constructive here over the next 3 to 6 months. And we're starting to see the economic data improve here. Specifically, the important part for me is the services PMI. We've seen manufacturing and industrial production come back online fairly strongly towards the end of last year. Services really hasn't seen any meaningful gains since August of last year, but in February, we finally saw a services PMI pick up here for Sweden. So that's encouraging to see that the services side, meaning restaurants, bars, salons, are getting back to work, and consumer confidence also seeing a pretty big boost here in February. So conjunction between those two, the economic numbers certainly are catching up to the where the equity markets have already priced in.
And let's turn to our trades for this afternoon. Of course, the first one in the industrial space, which is what you were discussing before, being more bullish in the cyclical areas.
Exactly. So we're looking at these more cyclical industries, specifically industrials, to be fairly strong here in this type of later stage of the economic recovery. So Husqvarna is really one that we're paying attention to, has seen a pretty large breakout here above that 115 resistance level. We think that there's further upside here, but because we're trading near all-time highs, these are the concerns that we have with continuing to push long positions at these relative highs, the way we want to do this is using options by limiting our risk. So the trade structure I'm using here is a debit vertical spread using the May 122.5, 135 call vertical here, spending only 445 Swedish crowns for 124 crown stock, which is risking just a little bit over, a little under 5% of the underlying stock price. So even if we see a correction in the Swedish markets, even if markets start to tumble, meaning if things go back into lockdown and we see all these stocks start to move to the downside, I'm only risking a little bit more than 4% of the stock price to take this bullish bet here for Husqvarna.
And our last trade is in gaming, and to no surprise, that's a bullish strategy.
Exactly. So we continue to see gaming to see substantial gains here to the upside, especially as Europe, we've seen quite a few countries actually go back into lockdown here in Europe. So the gaming stocks have actually continued to take off. We also see mobile gaming in the US in terms of online sports betting also taking off. So this combination of Evo gaming actually has intersections within both segments of the market. So that's why we really like this. And the stock price reflects that, one of the strongest stocks in the Swedish market. But same thing, trading at new all-time highs, trading at fairly rich valuations of about 75 times earnings. You want to make sure you protect yourself to the downside. So same thing, I'm using a call debit spread, paying about 7,000 crowns here for a 12,500 crown stock. Going out to May, I'm buying the 1245. 1485 debit spread, same trade structure. Here I'm risking about 3% of the underlying stock price to trade this. This is really, again, trying to limit the amount of risk that you would have to take to push new all-time highs on these types of stocks.
And finally, how can our Nordic audience reach you?
Yeah, we have a fantastic partnership here with the Nordic team, and you can actually access everything here at trade.optionsplay.com/TradeTalks.
All right, Tony, appreciate the insight. As always, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.